Thank you, Olga, and good morning and welcome, dear colleagues. Welcome to the formal opening of the 2022 OECD Business Integrity Roundtable, with a thematic event on incentivizing and assessing corporate anti-corruption compliance. So the 2022 Roundtable will again feature a series of virtual, thematic, and regional events focused on business integrity between now and the end of the year. So this Roundtable first thematic event explores a particular aspect of the OECD 2021 anti-bribery recommendation, which was developed by the OECD Working Group on Bribery. Among other things, that recommendation encourages governments to consider measures to incentivize corporate compliance for preventing and detecting foreign bribery in the law enforcement context, as well as in the granting of public advantages, including public procurement contracts. So to use the old and somewhat trivial metaphor, we are talking here about the carrots and sticks for incentivizing corporate compliance. The 2021 recommendation calls on governments, if they decide to offer such carrots or sticks, to provide training and guidance to their agencies on how to take into consideration companies' internal control, ethics, and compliance programs, or other similar measures. So in terms of law enforcement incentives, the sticks, a 2020 OECD study found that, unsurprisingly, the risk of prosecution is, together with reputational risk, one of the greatest incentives for companies to establish anti-corruption compliance programs. In addition, the enforcement approach can also induce companies to embrace compliance reforms. For example, law enforcement agencies in multiple working groups on bribery jurisdictions are required by law or by policy to take into account corporate compliance efforts, either when assessing corporate liability, determining the form of the resolution, as well as defining the sanctions that can be imposed. In some jurisdictions like the UK, a company can avoid liability because it has adequate procedures in place to prevent the wrongdoing. In certain jurisdictions, companies that engage in corruption can even have corporate monitors imposed to help the company address the root causes that contributed to the wrongdoing. The question, of course, then is whether the incentives are appropriately balanced to promote compliance while ensuring accountability for wrongdoing. And we will hear today from a prosecutor at the UK Serious Fraud Office, who can explain how these various enforcement tools can be used to promote anti-corruption compliance. So now, in terms of the positive incentives, or the carrots, as it were, we will also hear today some ideas about steps that national governments, as well as international organizations such as IFC, can provide outside the law enforcement context. This can range from enhancing corporate regulations, administrative oversight, such as in France, to using financial incentives to promote compliance. Of course, whenever governments create compliance incentives using either carrots or sticks, the government officials reviewing the company's compliance efforts must be able to identify and reward a genuine compliance effort. This will require developing the personnel and the resources to make some assessments of corporate compliance efforts. So there is an element here of capacity building. Here, governments can learn through dialogue with compliance experts from international organizations, the private sector, and academia about how such assessments can be made. If governments cannot make proper assessments, then the incentive structure that they adopt run the risk of disrupting the level playing field that the OECD strives precisely to promote. So as you can probably tell by now, the challenges here are not trivial, and there is a lot at stake if incentives are not properly designed and implemented. We know that fostering business integrity is always a challenge for both policymakers and businesses, not only in OECD member countries, but also in other regions of the world. These challenges arise for large companies already operating in multiple jurisdictions, as well as companies expanding into new markets. They are especially acute for smaller companies or startups operating in a challenging business environment. Here at the OECD, including at the Directorate for Financial and Enterprise Affairs, we have a number of projects that seek to help governments and businesses address these challenges. We are developing and promoting standards, obviously, the Anti-Bribery Convention, the Anti-Bribery Recommendation, and the guidelines for multinational enterprises, with mechanisms for ensuring their implementation and monitoring, such as the peer reviews of the Working Group on Bribery for the former, or the national contact points throughout OECD and non-OECD countries for the latter. We are providing platforms for policy dialogue, sharing good practices for fighting foreign bribery and corruption, and working on multiple fronts to promote business and public sector integrity, notably through the Anti-Corruption Network for Eastern Europe and Central Asia. We are also supporting the development by Australia, Japan, and the US of the Blue Dot Network that will promote anti-corruption standards in infrastructure. So, Chair of the Working Group on Bribery, dear Drago, delegates of the OECD Working Group on Bribery, and other policymakers, distinguished speakers, and other colleagues, I wish you today a productive discussion on this great agenda, and thank you for your attention.
Thank you very much, Nicolas. We will do, let's say, all what's in our powers to meet the expectations. So, ladies and gentlemen, good morning, good afternoon, good evening, wherever you are in the world. I'm sure you are aware of the fact that last year the OECD Anti-Corruption Division already held one business integrity roundtable, which was the test one, the pilot one, and there was a lot of interest around the world about it. And the idea behind the roundtable is very simple. We would like to give the opportunity for governments and companies to share good practices and experience on anti-corruption compliance from across the OECD and non-OECD countries. The roundtable enables the participants to exchange ideas about trends, emerging new challenges, and which would ask for more analysis and also to explore the potential role which the OECD can potentially play in those in responding to those new challenges. Today's roundtable follows the previous one, which exposed several issues that needed further attention, such as incentives for compliance, methodologies, how to assess compliance programs, challenges for the compliance profession in post-COVID world, SMEs, and so on. And today's roundtable discussion comes at a very, let's say, proper moment, because as Nicolas has said already, in November last year, we have adopted the 2021 OECD Anti-Bribery Recommendation, which dealt with many issues which have been identified in the last years in the roundtable as the ones meriting additional attention. So the 2021 recommendation introduces several novelties, which will hopefully promote business integrity, and those novelties are the so-called non-trial resolutions, which are basically out of the trial, dealing with foreign bribery offenses. We are encouraging countries to introduce positive incentives for companies willing to develop effective compliance systems. Of course, we are also we have inserted some additional incentives into the enforcement systems of the countries. So we are really trying hard to push the private sector to assist the governments as equal partner in fighting corruption and foreign bribery. So the purpose of today's event is to explore the power that governments have to promote business integrity but also good practices for implementing compliance aspects on the new 2021 recommendation. As you will see today, we have really worked hard to prepare the best possible dynamics of this roundtable discussion, because we do not only have speakers, we also have discussants. So we will work in the way that first each of the panelists will present shortly what he or she has to say following my question, which will be just a general guiding question. Then, of course, all other panelists, but also discussants, will be able to jump in and to discuss the issue. Now, we have 2 rounds of questions, and I would just like to ask all the panelists, but also discussants, that we should, let's say, not spend too much time on discussing particular issue, because otherwise we'll run out of possibility to give all the panelists, but also discussants, the time to speak in those 2 rounds of questions. The participants can start sending questions in already through the Q&A part of the Zoom, and we will do our best to respond to them either orally, and if this will not be possible, we still hope that some panelists will engage either during the session or even afterwards to respond to those questions in writing. So, without further ado, let us see who would be our, say, the star guests today. So we have the speakers: Saba McMeno, Case Controller from the UK Serious Fraud Office. We have Willem Pang, Director of the Third-Party Risk Management, Ethics and Compliance from the company Rio Tinto. We have Claudia Sanen, Region Manager from Africa, GIZ Alliance for Integrity. We have Faisal Siddiqui. He's the Deputy Chief of Compliance Officer in International Finance Corporation. We have Eugene Soltes, McLean Family Professor of Business Administration from the Harvard Business School. And we have Isadora Zubek, the International Affairs Officer at the AFA, French Anti-Corruption Agency. So those were the panelists. We also have the discussants, and we have Soji Apampa. He is the Chief Executive Officer of the Convention on Business Integrity from Nigeria. We have Nicola Bonucci, whom everybody knows. Currently, he's the partner of investigations and compliance in Port Hastings in France. We have Eduardo Rangel. He's the Global Head of Compliance in Abu Dhabi Islamic Bank in the UAE. We have Mr. Pana Ratana Mananpon, Project Director of the Thai Private Sector Collective Action Against Corruption, and Executive Vice President of the Thai Institute of Directors in Thailand. And we have Ms. Lana Sinichkina, partner from Artsinger, Ukraine. So you see, this is quite, let's say, the panel and the list of discussants are so that they are already a guarantee that we will face a very, very vivid and meaningful and hopefully useful discussions today. So the first round, we'll try to reply to the question, what governments can do to promote business integrity. And I will start with Saba. So Saba, the Working Group on Bribery Monitoring and studies have demonstrated the reputation and enforcement of the main drivers of anti-corruption compliance in member countries. What would you say, what the SFO law enforcement approach says about incentivizing businesses to develop and enhance anti-corruption compliance programs? And is this happening at all? Saba?
Thank you, Drago. Can I check that everyone can hear me okay?
Yeah, you can hear
me. Nods all around the room. It's a good start. Well, good morning, everyone, and thank you for joining this morning's conversation. It's a very important one, and I'm really pleased to be here and to share a UK perspective and a law enforcement perspective and add that perspective to the discussion today. Before I launch into answering the question, a very, very brief introduction for those unfamiliar with the SFO and our approach. So the UK Serious Fraud Office investigates and prosecutes serious and complex fraud, bribery and corruption cases. We focus on the most difficult and complex criminality and that often crosses international borders. Under the UK Bribery Act, which came into force in 2011, the SFO has the jurisdiction not just over companies incorporated in the UK, but also over any corporation which carries on a business or part of a business in the UK. And the definition of part of a business is very far-reaching. So a little bit then about our enforcement powers and how that links into encouraging business integrity, particularly within the compliance remit. Anyone in the audience here today with a UK dimension to their practice, their business, will know about Section 7 of the Bribery Act, which introduced a failure to prevent offence. That means that a company could be held criminally liable for any corrupt acts committed on its behalf if it had failed to prevent those acts. And I'll come on in due course to why compliance is so integral to that defence. But also just looking more generally at our enforcement powers. To begin with, we also in 2014 were given the power to negotiate what's called in the UK a deferred prosecution agreement. And that was with companies who had committed criminal conduct in the past, but who had reformed or were in the process of reforming and could demonstrate that to us. Under deferred prosecution agreements, companies must cooperate with the SFO, repay the proceeds of any crime, pay a fine or financial penalty, and also demonstrate a change internally. So I think you can probably anticipate, well, the relevance of that might be to compliance systems. That's obviously particularly relevant in relation to the OECD's recommendations, especially recommendation 23. So I'm going to look and talk about a little bit about how the UK Bribery Act and DPAs come together to incentivise business and to develop and enhance anti-corruption compliance programmes. So there are many reasons really, but I'm going to focus on the top four. I think the probably most significant in terms of behaviour or culture change was that a defence to Section 7 of the Bribery Act sets out that if your company can show that you have adequate procedures, it is a defence to, I haven't explained that very well already, and it's the most important point, but it is a defence to Section 7 of the Bribery Act if your company can show that they have adequate procedures. And a key part of those adequate procedures is whether or not a company had sound anti-bribery policies and a strong compliance culture. After Section 7 was introduced, we noticed improvement in UK corporate behaviour and culture across the board. Compliance departments grew and strengthened, and businesses were formed to assist and advise on better programmes. Because fundamentally of that threat that Drago referred to earlier of prosecution if bribery had occurred and if those adequate procedures were not in place. So we have seen in the UK how legislation can encourage, enhance anti-corruption compliance programmes, and how businesses are incentivised to put in place those programmes. In relation to our work specifically, I'm going to talk about the decision to prosecute and DPA and the decision to consider entering into a DPA and the impact that might have on incentivising robust anti-corruption compliance programmes. So in the UK, when we're considering if a particular case meets the threshold of prosecution, we have to apply a two-part test. It's called the Code for Crown Prosecutor test. And we also have to, within that test, look at the evidential considerations and public interest considerations as well. We also apply the guidance on corporate prosecutions. And within that guidance, it specifies that it's a public interest factor in favour of prosecution if an offence was committed at the time when a company had an ineffective corporate compliance programme. The counterpoint to that is that it's a factor against prosecution if a genuinely proactive and effective compliance programme was in place. And that obviously has an interplay with the Section 7 defence under the Bribery Act. I think the key words there are genuinely proactive and effective corporate compliance programmes. They really do have to be genuinely effective. And we'll come on in due course to sort of what we do to ensure that compliance programmes in place aren't just playing lip service to to effectively their obligations. So I would say that the incentive of avoiding a prosecution is a fairly good one, and that's very well embedded within our guidelines and our practice. Assuming, though, that we decide that the threshold for prosecution under the full code test has been met, we then consider whether or not a DPA, a deferred prosecution agreement, would be appropriate. And there are obvious advantages to companies for a DPA vis-a-vis having to face a trial and or a conviction within our court system. So in considering whether or not a DPA is appropriate, we would apply the DPA code of practice. That again sets out factors to consider when deciding whether or not a company can be considered for a DPA versus that immediate prosecution. And we would decide to prosecute over a DPA if offences were committed at the time when there was no or an ineffective compliance programme in place and the company wasn't able to show a significant improvement since then. So it flags the importance of companies showing a significant improvement in any compliance programme since offending. And I think that's particularly relevant when we look at things like mergers or acquisitions of companies where there's perhaps a distinction between the previous board members who were in place when bribery and corruption occurred vis-a-vis a sort of a new takeover of a company where there might be new board or new senior management in place at that stage. A DPA, however, is more likely if there is a proactive corporate compliance programme in place at the time of the offending and of any self-report, but that programme failed to be effective in that particular instance. So where bribery has occurred, we incentivise corporate compliance programmes through the offer effectively of a DPA, and that incentive is very strong to ensure effectively that robust compliant programs are in place and that also those programs are continually enhanced, reviewed to ensure that they are doing exactly what they're supposed to be doing. And then finally, I think the last incentive, if you like, that we give for having really robust corporate compliance programs is that, or maybe disincentive, is that as part of any sentence or DPA, we would put requirements in place to require companies to reform compliance programs where we've identified any failures. And we may also consider third-party monitors or reviewers, we call them, to scrutinise compliance programs on an ongoing basis. So to summarise our approach, we incentivise strong, robust and ever-improving anti-corruption compliance programs every single stage of our cases, from that initial referral or self-report, when we're considering prosecution, when we're looking at whether or not a company, if you like, is worthy of a DPA, and in sentencing and ongoing management of any DPAs.
Well, thank you. This was for sure not a warming up. That was straight to the core, the heart of the matter. And we expected that because UK have really some significant experience in dealing with compliance matters, especially the SFO, which for you, this is your daily business.
Indeed.
So anyone from the other panelists or from discussants would like to jump in here? I hope. Lana, were you asking for the floor?
Yes, hello. If it's time to now to intervene, then I can ask one provocative question, to start our discussion. This will be partly maybe a political question as well. So I understand that this is my opinion, that compliance is also about trust between the law enforcement authorities, government, so to say, and the businesses who make everything possible to become better, to become more clean, more transparent, more predictable in a certain way. But what we can observe now during the war against Ukraine, it's many governments, European governments, not many, but at least few very high political figures like government officials discredit themselves in terms of potential corruption, high political corruption. And now we observe a number of investigations against the high political officials in a number of countries. And on the other hand, we still anticipate from businesses to be going towards compliance, to moving and to improve themselves, and just want to understand your opinion. What do you think these recent events and what I said about this corruption signs from in different governments, European governments as well, who demand from businesses to be more compliant? What impact it may have on development generally of compliance culture, of trust between governments and businesses? Do you predict any changes in this regard? Maybe to the better, I don't know. Maybe if those investigations will be successful and those political figures will be brought to liability, including on corruption offenses, maybe then this will give a new, so to say, drive for development of compliance behavior in businesses and in the international society as well. What do you think?
Well, I guess this is the question for Saba. Soji, I guess you have another question.
Yes, just a very quick one. We work with the Maritime Anti-Corruption Network in Nigeria, and a lot of the members, what is really driving their actions to prevent bribery is the UK Bribery Act. So I can attest to the fact that it's working, and we're feeling it in a place like Nigeria. But now comes the definition of failure to prevent bribery. Does this reach out also to some of the government officials who are supposed to prevent bribery, as well as the counterparties in a jurisdiction like Nigeria? Just how far does the UK Bribery Act go? Because I think if officials felt that if they ever did travel to the UK and they were on the side of receiving bribes or soliciting bribes, that they could also fall under this law, I think it would also be a strong incentive for them to take up some of the change and the reforms that are being pushed here in Nigeria. I don't know how far it goes. Just your opinion. Thank you.
Thank you. Well, I think Saba got enough questions from the
Thank you. Yeah, very happy to answer both of those. Alana, first, I'll take your question first. It's a very good question. I completely understand the points that you're making. We are, although we're a government agency, we're an independent prosecution body, so I can't obviously really comment on UK politics or anything else that might be going on. What I will say is that cases are referred to us. We apply a very strict acceptance criteria. We look at effectively what's good or best for the UK economy, and that's one of our important acceptance criteria. And we take on cases that meet that criteria. So obviously can't comment on any ongoing cases at all, but I hope that doesn't really answer your question. But in terms of my remit and what I'm here for and what the SFO does, I can kind of focus on what we do as an independent prosecution body, but I'm not part of the government per se, although I'm a civil servant, so I can't really comment on broader government policy. Sorry, thank you. That's, sorry, am I pronouncing that right? Can you help me? Yeah, great, okay. I'm so pleased to hear that you feel like the UK Bribery Act is working, and that even as far away from us as Nigeria, the impact of that is felt. I think nothing makes me happier in terms of doing my day-to-day job than understanding that. So in terms of the impact on government officials and how the UK Bribery Act goes, obviously Section 6 of the Bribery Act relates to the payment of bribes to foreign public officials, and Section 2 to the receiving of those bribe payments. Under the Bribery Act, we would have jurisdiction over individuals abroad if they had a close connection to the UK. That doesn't mean to say that we, the sort of detail of that and having a close connection to the UK is set out within the body of the Act. So should officials be concerned that if they travel to the UK, they'd fall under the law? Well, that in itself wouldn't necessarily be sufficient. It doesn't mean that we wouldn't be interested in speaking to people if they travel to the UK and they were sort of on the parameters of one of our investigations. But really what I would point you to is looking at that close connection to the UK and what that meant, and that would then give us jurisdiction over individuals.
Thank you. So let us jump over the channel to France now. Isadora, France has embarked on a novel approach to promote compliance with regulation. Can you please describe the philosophy underpinning the AFA's approach to promoting corporate compliance both before and after corporate misconduct? And what impact has this had on French companies on the ground?
Thank you, Drago. Hello, everyone. I hope that you're doing well. First of all, I'd like to thank the OECD for organizing this roundtable discussion. It is a great honor to represent the FA in such a stimulating event. Thank you to all participants for joining us today. Before answering the specific question, like Saba, let me start with some background information about the FA. The FA was created by the law of 9 December 2016, known as the Sapin II law. This law is the culmination of a series of reforms that modernize France's integrity system. The FA is a nationwide service under the joint authority of the Minister of Justice and the Minister of Budget. Its core mission is to help public and private actors to prevent and detect corruption. The philosophy underpinning the FA's approach consists in placing prevention at the heart of collective anti-corruption efforts. The essential idea is here to recognize that the fight against corruption is not reserved to a few specialized law enforcement agencies, but that companies share this responsibility, that they must proactively reduce the opportunities for the occurrence of corruption. And as a matter of fact, the Sapin II law introduces mandatory compliance programs for large companies. And that's quite innovative. In this context, the FA promotes corporate compliance even in the absence of misconduct. It does that by providing guidance and advice to business entities and by auditing their compliance programs. The FA can also intervene after misconduct. In particular, the agencies in charge of monitoring compliance under judicial public interest agreements, or CJIP, which are the French equivalent to DPAs. The goal of such monitoring is to help companies to correct the vulnerabilities that enabled misconduct in the first place, and therefore to prevent future offenses. So here also the philosophy is preventive. In terms of impact, the FA's audits seem to confirm that the Sapin II law has been a catalyst for anti-corruption compliance. There is still room for improvement, of course, but tangible progress was made. Before, to give you some concrete examples, before the law, it was possible to find large companies that did not have compliance programs, companies in which anti-corruption measures do not exist at all. This has changed profoundly thanks to the law. And now, almost 6 years after its adoption, we see that the main components of compliance programs are in place in France, that companies have become increasingly aware of corruption risk, and they have engaged in a risk management process. Besides, we noticed that the tone at the top has improved. Senior managers are more committed to anti-corruption compliance than before. They are more closely involved in promoting business integrity and in keeping track of the implementation of their company's compliance programs. Furthermore, we have seen and also supported the development of the compliance function inside companies. The compliance profession has gained prominence in France after the adoption of the Sapin II law, as new diplomas have been created. And finally, in terms of impact, we realized that the positive effects of our regulation could be observed beyond our national borders. And this maybe can echo Soji's remark, because on the one hand, we noticed that some subsidiaries of foreign groups operating in France can fall within the scope of Sapin II, and that these subsidiaries were able to share the good practices developed in the French context with their parent companies abroad. And likewise, foreign subsidiaries of French groups must comply with Sapin II, and therefore the French anti-corruption standards are being disseminated through business units in other countries. To sum up, the impact on the ground has been positive overall. Thanks.
Well, thank you, Isadora. Well, I can just confirm what you just said, because we also feel this into the working for bribery, but not only there, participating in many international conferences, workshops, roundtables. It is obvious that things have moved significantly after the AFA started to engage in this area. So the first one to raise the hand was Nicola. Nicola.
Thank you, Drago. Pleasure of the private sector. I'm trying to respond to a client while I'm attending the conference, which is kind of a challenge. But I listened carefully to Isadora, also to Saba. I think one point which is worth noting in terms of the control of the internal control and compliance system that companies have to put in place or are encouraged to put in place is that the French system is indeed slightly different than the previous one, the one set up by the UK Bribery Act, even though the goal is the same. And let me point out the two main differences. Point number one, and here I took under the control of Saba, there is nothing stricto sensu in the English legislation, as far as I know, that obliges company to have an internal control and compliance system in place. If they don't have it, clearly they will not be able to use the defense of the adequate control system. But companies are strongly encouraged to do that. But I don't think there is an affirmative obligation to do that, contrary to France, where companies above a certain threshold, they have a legal obligation to have this in place. And this naturally has a consequence also on how you exercise as, let's say, a law enforcement authority or a regulatory authority, your control on the existence of such a system and the effectiveness. Saba was referring to, appropriately, to the effectiveness of the system. And in the UK, like in the US, it is very much a post facto judgment, i.e., the system is looked at if and when there is an issue. And it will be tested vis-a-vis the issue, i.e., in reality, in a sense, in reality. This is naturally something that also the French can do, but the French have added the ex-ante control that the AFA is exercising, which is looking at the effectiveness of the system without having necessarily an issue. I'm not taking a standing on who is better and who is not, because they also, I think, respond to different culture. I would note, by the way, that the Italian, with the decree law 231, has also something similar, to the French legislation, in the sense that you need to have a certain system and a certain mechanism in place, irrespective of do you have an issue or not. But I'm wondering, and here I'm asking also the question to both Saba and Isadora, is there a risk that we have a situation in the future where a company has passed, let's say, the AFA control, but then is found not to have an effective system in the UK? And then, you know, what does this mean for the company? Because sometimes the company have the feeling that because they pass the AFA control system, they are okay. But the reality is that, you know, they are okay vis-a-vis the French authorities, but, you know, the UK authorities or the US authorities or others may come to a different conclusion. So a bit of challenge here, I think, and, you know, as you can see, I'm now trying really to defend the companies, but a bit of a challenge here for the companies. So what is your view on that?
Well, Isadora, let's wait. We have two more requests for the floor, so we try to collect all the questions and then we'll see the answers. Lana, you're next.
Thank you. One more question. It concerns DPA. Despite the missiles attacks, we also developed this instrument in Ukraine in relation to corruption offenses. But what we face, and maybe what you can also advise or comment from your side, what can be incentives to make business to, like, you know, to be to develop compliance systems in the companies when the enforcement practice is very poor in the country? So actually, the enforcement practice against the corruption offenses exactly in relation to legal entities in Ukraine doesn't exist, to say simply. Although the respective rules in the criminal courts are in place, but the enforcement is not in place just because it's not the priority for our law enforcement bodies. And in these conditions, it's very hard to invent something new, something else, to motivate businesses to develop a compliance system. So I think that we here in our collective action organization, which is called Ukrainian Network of Integrity and Compliance, we already invented almost everything possible to make businesses moving towards compliance. But I think that we are already short of ideas. So we are now discussing the certification and somehow you know, incentivize businesses to make those certification by, you know, maybe providing the easiest way to get some credits from banks. Now we are also developing, as I said, and the draft law already developed about the DPA. But the question is, why do they need this DPA? And to take those obligations, compliance obligations through the DPA on the voluntary basis or not voluntary basis, when the enforcement practice is missing itself. So this is not an easy question, but maybe you can drop some ideas from your countries, from your experiences. Maybe you've already had some similar situation in some jurisdictions. Thank you.
Thank you, and Eduardo.
Thank you. I would like to point out a few principles that have been mentioned by the panelists, which are really, really important. Number one, no one is above the law. No one anywhere is above the law. And by really following this principle, it really paves the way for cooperation when it comes to supporting different governments and different actions in fighting corruption. Now, another interesting point that I think it requires a little bit clarity is someone mentioned, well, what about the extraterritoriality of ABAC legislation or anti-corruption policies? When we look at the international outreach of my policy over somebody else's entities, business, or jurisdiction, you really need to look at the nexus. And when you are going through the principles of your policy or your legislation, you look at what is the jurisdiction of incorporation of the entities involved in corruption, what is the nationality of the directors involved in corruption activities, what is the source of products and services which are being subject or abused for corruption. And then, of course, from a banking perspective, we look at what is the origin and the destination of flows involved in corruption. And then we start collaborating with governments, agencies, and so forth.
Well, Isadora, those are all very comprehensive questions, but may I ask you to be as concise, as precise, and as short as possible, because I know if you continue this pace, we will sit for the next 6-7 hours.
I will try, Drago. Thank you so much for this great questions, and thank you, Nicola, for this very good analysis of the differences between the French and the Anglo-Saxon system. It was great. On your question, I think we just have to keep in mind that DFA's audits truly help companies to improve their compliance programs, but they are not certifications. They just are a review at a precise moment at time. So if there are offenses that are committed afterwards, we cannot use an audit report of DFA and say, oh, everything was okay. It's not the goal of the audit, but of course, it gives some assurance that there are some procedures that are effective and that have been implemented by the company. On the question on how the other authorities can interpret our standards and the results of our audits, well, the SAP 2 law was inspired in international best practices. So I think that the measures that are mentioned in Article 17, the different components of compliance programs that are mandatory, they're pretty much aligned with the standards that are used by the SFO or the DOJ. So I don't see many discrepancies there on the standards themselves. But right now, the DFA is conducting a study to analyze those standards and the compliance guidelines of different foreign authorities in order to see what are the differences and similarities. So it's a work in progress, but it's really important because it's a vital insurance to companies to know that if they are complying with SAP 2, they are also compliant with other legislations. On the question of Lana, how to incentivize compliance when enforcement is poor, it's tricky because enforcement remains key. If misconduct is not sanctioned, it's very hard to sanction, to encourage compliance. It's the prevention side needs to have a repression dimension. One is not independent from the other, they are complementary. My presentation was only on prevention because I'm representing the DFA, but the reforms also dealt with enforcement, and we have new institutions dedicated to this. But one thing that we can share about our experience is that we provide guidance to companies, and we try to have an open dialogue and cooperation with them in order to show that compliance is not just a burden, something that could potentially kill the business, but on the contrary, that it's an investment, that is something good that can increase competitiveness and can help companies to better organize their activities and to reach new markets in a way that's more resilient to risks. So this maybe can be an argument that could work in the Ukrainian context. And on the last question on the extraterritorial reach of the legislation, maybe Saba has more input on this. But as I mentioned in my presentation, the prevention obligations of SAP 2 are applicable both to companies based in France. So French groups that have headquarters in France, they have to apply this in the subsidiaries, and the French subsidiaries of foreign groups, if they're above the thresholds, also need to comply with the compliance obligations. So there is this extraterritorial outreach. I hope it was clear, but I'll be happy to answer any questions later on. Thanks.
Thank you very much, Isadora. It was clear, and let me just work for everybody. Now, for 2 questions, we spent approximately 40 minutes. So please, for the future, let's say really precise, concise, and short, but still saying everything what you are planning to say. And let me remind you that there are 2 very interesting questions in the chat box, and I would invite you all, the panelists or the discussants, to take a look and maybe reply to them. And then after, let's say, we will go to Faisal now, but after Faisal will end his part, maybe someone from you would feel, let's say, happy to respond to that. And of course, this goes also to Isadora and Saba. So we should not let you now resting. You still have to work with us. So Faisal, what role do international financial institutions play in promoting business integrity, either given the power of the purse or their important mechanisms? And according to your experience, what tools work best to promote business integrity?
Thank you very much. I'm very grateful to the OECD for the opportunity to provide the perspective of international financial institutions, and of course to my fellow panelists for this very interesting discussions, and the attendees for your time and interest in this subject matter. Perhaps I'll begin also by saying a little bit about IFC. IFC is the private sector arm of the World Bank Group. We are the largest development institution that invests in the private sector. And to give you a sense of the scale, our outstanding portfolio is about $80 billion. And that's everything from loans, project finance, equity shares in companies, trade finance, and we work across emerging markets to alleviate poverty. To answer the question, I would say there's 4 basic ways that that we incentivize or work with companies to improve compliance. One, as you mentioned, is the power of the purse, our financing. But more importantly, it's not just our financing, but our convening power and our ability to mobilize additional financing. So for example, last year, if you look at the long-term financing that IFC committed, only about 50% of that is IFC's own account. The other 50% was funds that were mobilized through other business partners, large companies in the OECD countries, trust funds. So IFC's ability to mobilize other funds and bring other potential investors in is a huge convening power that we have. Second, I would mention our integrity due diligence standards. We spend a tremendous amount of time at IFC due diligencing our potential projects, our investee companies before we invest. And that ability to conduct thorough IDD is relied upon by our other business partners. And there again, we have a convening power where other development finance institutions or even other multilateral development banks look to IFC to see whether or not we are comfortable investing in a particular transaction or with a particular entity before investing as well. Third, I would say our ability to work with companies when we identify compliance gaps. One of the tools we use is developing an action plan for companies that is tied to our financing. So for example, if we're looking at a specific company and they have certain compliance gaps, we will develop an action plan for them to improve their compliance programs and tie that to different landmarks, if you will, or milestones in the project prior to disbursements. So we spend a lot of time with clients, and clients will often ask us, what can we do to improve our compliance systems? How can we help? How can IFC help us? So we do some of, as you mentioned, the capacity building as well. And then finally, I'd like to mention our remedies. If there are issues that arise, there are 2 basic remedies that we have. One are our commercial remedies, and the others is the World Bank Group sanction and debarment process. In terms of our commercial remedies, we have very strong remedies that we seek for bribery and corruption. So for example, in our equity deals, when we buy shares in companies, we negotiate a policy put, meaning that if we believe that there is evidence of bribery, we can put the shares to the company or the sponsor. It's a remedy that is not always easy to negotiate, but one we feel strongly about, and one that provides significant incentives to the company to not engage in bribery or corruption. And then finally, as I mentioned, the World Bank Group sanctions and debarment system. If we do suspect that there are allegations of bribery, we refer that over to the Integrity Vice Presidency of the World Bank Group, which conducts an investigation and can potentially debar an entity from further World Bank Group financing.
Thank you, Faisal, and thank you for following my advice, because it was very precise and short.
Thank you.
Any comments and questions for Faisal? Claudia?
I can only, if you,
Yeah, of course, Olga.
if I may just say one word, it's not a question, it's a comment. My thanks to OECD and IFC and other international partners and organizations who really drive anti-corruption reforms in Ukraine today. And this is not exaggeration. Without the international partners, without the international donors, we will not be able to move it forward, unfortunately. And because, you know, when such a full-scale war is in place, any anti-corruption reforms and good governance reforms are somehow not in the priority for the governments, because of course the security is in priority. But at the same time, we understand that that corruption is also one of the reasons of today's situation, today's war. So that's why I just wanted to thank all of you who made their efforts in Ukraine.
Well, thank you. Well, you're right, corruption has also caused many bad things, including part of what is going on now in Ukraine. And without IFPs, things will be much better. Claudia, to you.
Thank you. I actually have a question about looking beyond the first step and looking in towards the supply chains as well. For Faisal, how much does your due diligence, how much does the work that you do with strengthening the mechanisms themselves also look towards the supply chains that are often in more vulnerable situations, in more vulnerable countries in some cases as well? That would be quite interesting to know.
Sure, thank you. We do look above and below the project company. So for example, with ultimate beneficial owners, we look at 5% or above of beneficial ownership for a project. So that means we are due diligencing massive chains, ownership chains, individuals and entities as well. Sometimes I was talking to someone last week about a power project that they were due diligencing in Asia, where there are about 500 names that they're going to have to due diligence. But that applies to the supply chain as well. As you can imagine, right now there's a lot of issues around forced labor, in supply chain. So that is an issue that we are looking at as well.
Thank you. There's another question from Pana. I hope I can call you by your first name as anybody else, because your family name is really, it's a challenge. I have to admit.
Certainly, Drago. I won't torture you on a Friday evening. Good to see you, Gabriele, and good to see you, everybody. Thanks for inviting the Thai CAC to the panel. We are a collective action for private companies and have been actively raising awareness and compliance in Thailand for over 10 years. And to date, we have 500 companies which are members. Regarding the IFIs, I just want to ask if it would be possible for IFC or EBRD or even EDB, number one, to work together with private sectors when investing in high-risk countries. And the collaboration could be ranging from requiring companies to disclose their compliance system that they have in place, to incentivizing any certification that the host country may have, and perhaps asking the private companies to request or to be certified. And also, number two is that for high-risk projects, such as projects involving bidding on concessions or high permitting risk projects, does IFC require a more stringent due diligence on these opportunities? Thank you.
Sure. I mean, the answer is yes, and that's from a practical perspective. So certainly in concessioning projects, we look at how the concession was awarded. We look at the legal due diligence around the concession. And as probably everyone here knows, there's a lot of corruption risk in those types of projects. But we do spend a lot of time due diligencing them, and happy to further discussion offline about how we can work with your organization. Another thing, and I'll maybe talk about this a little more, and you sort of hint to it, Panna, is general corporate governance, because we find we have a corporate governance practice that looks at the corporate governance structures of the projects and the entities we invest in. And there's, we have found a strong link between overall good corporate governance and anti-corruption, anti-bribery compliance.
Thank you. Claudia, would you mind lowering your hand? Okay, down. And let's say, any volunteer to answer the question, which is in Q&A section? Not okay. Eduardo, go on. Thank you. Eduardo,
I was struggling with the unmute. Yeah, I think it's a really interesting question in the box. How do we incentivize at the board level any investment on anti-corruption measures? This is something that I have been involved very closely lately, and the reason is, in the age where we come from, in the past, there could be criticism against companies for being weak in terms of fighting corruption. But now, in the age where every single executive has a social profile, a public profile, we really talk very openly about reputational risk. So the reputational risk not only affects the entity, but affects the members of the board, affects the senior management of a company. And when we make this conversation relatable to them and how this can have an effect on their future prospects, if they will sometime or in the future lead other companies, they start taking conscious and they start being more willing to say, absolutely, there is a positive impact on the image of the company, and therefore there will be a positive impact on the individuals running the company. So that's how it really helps to have that as an introduction when we are dealing with boards. The second part of the question was, let me see very quickly. I kept it open here. Yes, how do we change the status quo, and how do we change bad practices? This is also something that we are tackling very, very firmly. And I would like to mention, for example, in the UAE, there's a new regulation. It's called Consumer Protection Regulation. And this regulation, the CPR, has revamped the entire industries. It's not only for financial services, it affects every single industry in the country. And now there are provisions protecting customers, protecting business parties against, for example, mis-selling or dishonest illegal activity. We have seen a welcoming of the CPR, and now industries are actually changing incentive programs. The question in the body of the comment mentions, well, before it was a reward, there were rewards for achieving objectives or achieving targets. It's true, that was in the past, but now these days, we have actually changed the internal incentive plans. where we say there are serious consequences for those instances where executives or people involved in the sales or in the procurement are involved in corruption. So this is being welcomed by the entire jurisdiction, and I'm happy to follow these offline and give some other talking points.
Thank you very much, Eduardo. And I also see that Soji is also typing something which machine recognizes as an answer. So we'll get there soon. And the next question goes to Claudia. Claudia, the Alliance for Integrity is working with public and private entities to promote business integrity in various regions. What tools have proven to be most effective in changing corporate compliance mindset, especially for the SMEs in non-OECD countries?
Thank you so much, Drago, for this question, and also good morning to everyone here. Thank you for the invitation. It's really inspiring to see the different innovative approaches that we see here, everybody working together, all from different angles, some in different countries to prevent corruption, to fight corruption, to increase integrity. This is really a nice setting that you have created, and very interesting to be able to learn from each other as well. So as everybody else did, I think it's a good idea to maybe take a step back and also explain briefly about the Alliance for Integrity, who we are, what we do, how we operate, and also give an overview, of course, about the tools that we provide and which of those are most effective in the context that we are talking about. So we are a business-driven multi-stakeholder initiative. We focus mainly on small and medium-sized companies, hence the question. And we work on promoting transparency and integrity, not only within the companies, but in the economic system overall. We do so mainly by collective action. It has been mentioned a little bit already by our discussionists as well, by the panelists as well. Collective action has also been a topic for the OECD recommendations as well. So this is the way that we work very strongly. We work together with relevant actors from the private sector, from the public sector, and also civil society, which is a really important function of raising the bar, of also being a watchdog. So we should not forget to include them in the discussion here as well. And what we do mainly is to strengthen compliance capacities of companies and also within the supply chain. This is why I asked Faisal about the supply chains as well. It's quite important for us. We do so with compliance trainings, with guidelines, peer-to-peer learning. And we also try to contribute to the improvement of the framework conditions, so fostering dialogue between public and private sectors, including, of course, on topics about incentives. And when we look through all the different regions that we are active in, so we work in Latin America, we work in Africa, we work in Asia. Most of the countries we work in are not OECD countries yet. The most effective tools that we see have specific characteristics. They are all practical. They are all demand-driven, especially when we talk about SMEs, of course. They are all mostly effective when they are embedded in collective action. I said it already, and I will say it most likely again. They are more likely to succeed or to be successful if they are in an environment where there is a smart mix of incentives. We already have talked about the complications that we see if there are no legal, legal incentives or legal sanctions specifically, or no enforcement of the sanctions, but also where positive sanctions, positive incentives are, and commercial reputational ones as well. And for the SMEs, of course, the most important part is the business case. So this is the main role that we need to address. And I wanted to bring maybe 3 very practical examples of how we do that, and which is quite maybe interesting for you. The first of all is our training program that we have, which is called From Companies to Companies. And in this training program, we work together with big companies, and there they can learn firsthand from the compliance officers of big companies about the benefits of a compliance program. Of course, there they share the practical cases on legal sanctions, depending on the country and the region and the sector they are in. So these are also sector specific. And the risk of prosecution, the risk of fines in case of no effective compliance mechanisms in place, but also, of course, talking about legal incentives for compliance, etc. And in these trainings also, we raise awareness on the existing reputational and commercial incentives and sanctions. So this is the basic work that we do. But we also have some interesting tools that focus more on commercial incentives. We have here, for example, a format that is called SheBits, which we developed and implemented together with UNDP and Fairbis in Indonesia. And it's a program that aims at increasing the participation of SMEs in public procurement in general, where we know that high corruption risks exist. And it focuses specifically on women entrepreneurs, which is also quite an important topic for us. And the idea in this tool is to empower women-led enterprises to access government contracts with integrity. So it's a training workshop where women can learn practical approaches to this kind of biddings. And finally, we have already talked a lot about effective mechanisms that focus mainly on reputational incentives. So reputation is a very important and strong point as well. And here we work mainly with voluntary, of course, seals. So we have a variety of examples. Many of them are in Latin America. And I want to highlight one of them. That is the Agromais integrity seal from the Ministry of Agriculture in Brazil. And this seal does not look only into integrity programs, but also focuses on social responsibility, sustainability. So we all know the tendency of these three things starting to come together as well, not only anti-corruption compliance, but also compliance for all the different sectors as well. And I'm highlighting this here because active participation of civil society was not only, and public sector, private sector working together in a multi-stakeholder approach was not only part of the development, but is now also part of the evaluation process of the seal. And this can be quite crucial. So yeah, these were some of the tools that we have and know about that are quite effective and interesting as well. And one thing that is really important is to make sure that they fit the local context. It does not work one size fits it all. We know it by now already. And also to look if those things that you try to implement, that if they really aggregate to the smart mix of incentives in the different countries as well. So that would be my answer for now.
Thank you, Claudia. Any comments, questions? Pana.
Thanks, Drago. I want to share with you our experience in terms of incentivizing the SMEs in Thailand to participate in our certification program. First of all, we have a simplified certification program for the SMEs, which involves only 17 checklists versus 71 checklists for large companies. That makes it easier for them to participate. But the economic incentives that you mentioned, Claudia, is what I'd like to share with you. We work together with large companies mainly and allow them to become what we call change agents. So these large companies, some of them have supply chains, which are SMEs in the thousands. We gave them the change agent recognition and asked them to offer incentives to their SMEs. And so far we have 24 large companies that have become change agents with a combined couple tens of thousand supply chains. And some of them offer bonus points when SMEs that have compliance bid on products and services of large companies. Some of the change agents offer reduced payment terms. So instead of 2 months waiting for payments for 2 months, they get paid in a month. So these economic benefits and working through large company really incentivize the SMEs versus trying to recruit them alone. Thank you.
it's really interesting what you shared by now, because it's a combination of something that we are already doing and taking it in a certain way step further as well. And we are currently working on a study on analyzing different incentive mechanisms, how they work, etc. So most likely we will reach out to you to get to know this a little bit better as well, because it's a really interesting model. Thank you for sharing.
Isadora.
Yes, maybe just a quick remark on our experience of the compliance obligations for large companies and how they can play a role in incentivizing compliance in SMEs. Because one of the components of compliance programs is to conduct third-party due diligence of suppliers and clients. So we noticed that even though SMEs in France do not fall within the threshold of the law, which requires companies to have at least 500 employees and a turnover of more than 100 million euros, even though they are not legally obliged to have compliance measures, they're actually doing it because it's good for business, because larger companies will request some insurance of integrity. So maybe it's another idea of how to incentivize compliance in without regulation, or without regulation for this specific group.
Yeah, this idea of the trickle-down effect,
Olga,
right?
From the division will help us on that too. Claudia, you first, and then we'll go to Olga.
Just very quickly, since there seems to be a lot of interest in integrity and SMEs, I wanted to advertise our next seminar in the series that the date is not set yet. It will be announced soon. But that would be about integrity and SMEs. We will look forward to see you there.
Claudia.
Yeah, I think I'm done with my intervention. Thank you so much also, Olga, for sharing this information. I think it will be a very interesting topic, and it's something that is raising more and more concerns in general with the EU supply chain law coming up here in Germany. We are part of the German development agency, Gesellschaft für internationale Zusammenarbeit. Of course, we have our very nice word, Lieferkettengesetz. So for us, it's a quite important thing also to look into how we can foster compliance and integrity in the supply chain. So yeah, this is a really interesting focus on the SMEs right now as well. Thank you.
Thank you. So let's go to Willem. Willem, from the perspective of working on compliance for companies with operations in both OECD and non-OECD countries, which incentives, positive or negative, do you believe have the most impact on corporate culture and decision making?
Yeah, that's a big question. So look, I've spent the last 20 years operationalizing legislation in various forms, and I listened with interest. Isadora, I'm really very interested. I was very interested, particularly in your presentation and that emphasis on a preventative focus. Saba, I must also freely admit that the UK Bribery Act played a very prominent role in my career development, so I was very thankful that it was there. So one of the key things is, although I intellectually resonate with the French approach, there is a degree of caution there. I think one of those incentives in what was captured in the UK Bribery Act is that through your systemic behavior, you can make the stick smaller. Whether you can truly measure what carrots look like is an interesting question. Can you truly measure what good looks like? Now, in all fairness, having a compliance program is infinitely better than not having one. Whether that compliance program is ultimately effective or not, that's a different story. But what credence or what value you place on that measurement of effectiveness is always a challenge, and it might be also where Nicola was coming from when he asked that question. It's the same in culture, for instance. If you've got very strong engagement scores, it doesn't necessarily mean anything because you can be engaged for all the wrong reasons. But a very negative culture, negative culture scores does mean something, and it does correlate to heightened risk. So I asked myself, where does the incentives lie? I spend a large proportion of my time actually just doing two things. The first is I try and aggregate data and turn it into manageable risk information, primarily in deep supply chains and third-party relationships. And the second is I try and encourage good decision-making based on that information. So it's this principle of what can be done to gather good information, and then what needs to be done to foster good decision-making on what you find. One of our primary challenges in the supply chain environment is sometimes the lack of transparency around beneficial ownership. So you need to spend an enormous amount of time to try and break through the corporate veil, trying to understand what really sits behind many of these our primary, but also our secondary, all the way to our ultimate relationships. So any type of government intervention that brings greater transparency and more sunlight in beneficial ownership is deeply, deeply incentivizing, because it means that we can spend more time and more focus on actually doing sensible things with that information and making good decisions. So that takes me to the decision-making model, and there the corporate governance was mentioned. So again, I think corporate governance and the growth in corporate governance is a positive development over the last 30 years. But again, there's a word of caution. Sometimes my experience has been that it has been understood in too structural terms. Corporate governance has structures. Corporate governance as the organization of various committee structures. Now, of course, that is important, but most very poor corporate decisions are actually governed decisions. They were made under a fair degree of governance. So the problem in governance isn't necessarily structural, it's compositional. You've got the wrong people in governance forums making the wrong type of decisions. So the narrative and the thinking isn't always integrative and balanced. There isn't a proper balance between commercial considerations, legal considerations, ethical and reputational considerations, because that is precisely what a modern multinational corporate needs to balance on a daily basis. And maybe I can illustrate it through very simple examples. When you govern a large global risk program, one part of that governance is that you need to oversee the frameworks, the policies, and the procedures. And to do that, you would often have internal audit or so-called second line risk and compliance people. Another aspect is that you need to set risk appetite and particular policy positions that govern how you react with the information you receive. Now, there you need deep commercial skills and often enterprise leadership to be able to make those calls. And then occasionally you need to decide on the desirability of particular entities of interest. And then again, your composition now may include data scientists, risk and compliance individuals, and commercial. And you can see that the dynamics in how you compositionally work with within governance structures and how you rely on increasingly complex and interrelated data sets places a very large burden on organizations. So any intervention that lightens the load on the information side and a recognition of the importance of that compositional approach to governance is certainly beneficial, especially when it comes to Saba's opening points, the demonstration of adequate procedures and the like. I think those are some of the key things that occupy my mind on an almost daily basis. The last point is to close out, and it reacts to the commentary that was also placed there. There is another objective indicator, I think, of quite a strong indicator of the strength of compliance programs. And it simply has to do with the strength and the capability and the experience of the compliance office. You cannot say that you are truly committed to running a effective ABC compliance, ethics and compliance program if it is not adequately resourced by experienced people. So that is a strong and a fairly objective indicator of potential success. It doesn't necessarily translate into success, but it is an indicator of potential success. Drago, I'll leave it there.
Thank you very much. Anybody would like to comment what we just heard? We have approximately the same question for the next panelist. And let me ask you, Eugene, based on your research on corporate compliance, what does it make more impact? Government or market incentives? And is there anything governments could do to improve corporate compliance in decision making?
Great. Well, thank you so much for the opportunity to join today. It's really a privilege to join this wonderful group. By way of background, so I'm a professor at Harvard Business School, and my work and that of my group primarily focuses on using data to both prevent, detect, and respond to allegations of misconduct, including, of course, bribery and corruption. And I thought to respond to this question, maybe make two observations. The first is around compliance program design and what I would describe as paper versus practice. So this is going to give the which is most important regulation or governments and individual incentives, but showing how it's a mix of both. So obviously, as most people know, in the United States, we have the Department of Justice has created the evaluation of corporate compliance programs, which is, I will say, incredibly influential here with firms, obviously, that are not just US based, but also most organizations that have some connection to the US based, given the jurisdictional coverage of the DOJ. One of the interesting observations that has emerged since the creation of that, I think, and become even more present, is what I would describe as firms and organizations that create compliance programs that are very effective on paper and those that actually are effective in practice. And I think most people are probably familiar with the types of questions that are on that compliance evaluation and that firms look to when they're designing a compliance program. And there are better and worse ways to answer many of those questions. And so, for example, you'll see every organization having a mission statement and a code of conduct. And most organizations have employees attest that they've both read and reviewed that, they agree to follow it, and that they would report violations. What we've spent a lot of time working with organizations on and saying, well, does that code of conduct actually do anything? What are firms actually doing with that? And if you actually literally ask employees at those companies, oftentimes a week or two after they sign that code of conduct, did you see a violation of XYZ type? And if so, did you report it? Invariably, you generally find on average somewhere between 30 and 50% of employees reporting those violations. So to the extent that they literally signed a week earlier, something that's saying that they would report those violations, literally a week later, you ask them and people are already, and these are large, well-established multinationals, largely saying in half the time at best, they are doing it. And I think that is not to say one should not have such attestations. There's a lot of good liability reasons to do that. But it also suggests that simply putting these things on paper and practice isn't sufficient to actually drive effective compliance. And what we see more effective organizations doing, and I think very much nudged by regulators and enforcement agencies, is actually taking a more data-driven approach. So to the extent that it's great that you have a code of conduct, it's great that you have those things on paper, but how well do employees within your organization understand it? Do they actually follow it? And to the extent that there are those gaps, how are you developing an understanding of where those gaps are, and what are you doing to try to improve upon that? And so it's really a process of continual improvement. Also, that's a deeply psychological process, because there are a lot of reasons why employees, for example, tend not to report, even in effective companies that have an effective compliance programs, report allegations of misconduct. So I think it's this intersection between regulators and enforcement agencies nudging and providing the encouragement and incentives, but I also think then holding firms accountable, oftentimes with challenging questions. And I think this is something, to the credit, I think the DOJ is increasingly doing, asking firms increasingly challenging questions to evaluate their programs. I think the second point around incentives, private versus kind of, I'll say private incentives versus public regulatory, I would call incentives, is what I call, what we all think about is the difference between following the spirit of law and following the letter of the law. And I think this becomes especially important in the context of corruption. A lot of my work, especially over the last couple of years, has really focused on the ways, oftentimes that are very clever, that organizations design incentives to both tell people to literally follow the letter of the law, but they're really incentivizing clever ways to find ways to circumvent that. And if I give an example around, corruption, a common practice, and I don't want to say common, but not so infrequent that we saw organizations doing is, most large organizations have pretty clear policies, and people have a pretty good understanding that you don't bring briefcases of money to politicians or ministers to win contracts. But there are still a lot of places in the world that companies want to pay effectively bribes to get to win certain contracts. And so one of the things that we saw some firms doing is giving I'll say a work of art, or we'll say a drawing that'll be worth $100. They can put that on their books and records. And then implicitly what they would be doing is a couple months later buying it back at an obscure auction house for $25,000 or $50,000. It's an arm's length transaction. It's a separate transaction. Both of these are shown on the books and records. They're separate transactions. It's actually an auction house, so it's arm's length, so you don't have quid pro quo. I think everyone can appreciate here that it has all the characteristics. It has both the intent and outcome of bribery, but this is something that at some actually very sophisticated companies was actually not just permitted, but was actually incentivized as being a pretty clever solution to effectively bribe certain ministers, but not have the potential concerns associated with some of the regulatory concerns. And I know we have some regulators and enforcement agencies on here, and I think rightfully eyes raising when you hear that kind of example. But short of documenting that in like an email or a memo, that would be an example of it's very, very hard to actually create an action against an organization. And I think this is something where what are the incentives within the organization to actually follow and actually not engage in corruption? And I think that is the area that I think many organizations and I think many jurisdictions are still struggling with, because you can do a lot of effective things in designing a program, but if the underlying culture still incentivizes, and there are high power incentives to encourage that kind of circuitous loopholing, that ultimately is what you will end up seeing around in even large sophisticated organizations.
Thank you. So any questions? Oh, Willem. Go on, Willem.
Eugene, that was really interesting. I just sort of made a note that I need to go and take a look at artwork entries in our corporate registry. So one of the key things that I think you raise is when we look at third parties outside of an organization, it's also important to look at the employee relationships with those third parties. So the ability to bring outside business interest, donation activity, gifts and entertainment data, and connect that to third parties is increasingly important. But again, it represents a data challenge. It represents an information management challenge to do that, and to do that dynamically and at scale. So hence a very large component of running a non-financial risk global program is in data management and the information management components, and then in the decision making. The interesting thing is that the actual proportional time that I would be spending on the law itself is probably 5%. The rest of my time is information management, system design, product life cycle, supplier life cycle analysis, customer life cycle analysis, culture assessment, and corporate governance. So there's and that naturally places a lot of challenges on how you set up these global offices and how you run them. So from a regulatory perspective, coming back to incentives, the last thing you want to have is more complexity. So what an organization would be looking for from a regulatory intervention is not adding to the complexity. So sometimes the biggest benefit, the biggest incentive is not to do complex things from a regulatory perspective and to keep it as simple as is functionally possible, because the world is already quite complex.
I think that's a great observation, and maybe just one additional point. I think
Soji. Go on, Eugene.
Just briefly, one point, just to not as much as, and I'm obviously quite enamored by data. I'm a data geek by nature. I think one of the humbling parts is we can put all the systems we want and process around travel and expense, third party, and people will find other incentives in other ways. I mean, so the kind of the classic examples that some of the larger banks engaged in is give internships away, give things that are not T&E and are going to be impossible to record throughout data. And I think it just shows human ingenuity will always kind of be one step further than enforcement, regulators, and I would say even really smart compliance programs, because you just need to find one way to circumvent the system and processes, which is why incentives play such an important role in the end for filling in those gaps.
Thank you. Soji, you're next.
Thank you very much, Jaco. I just wanted to raise a point relating to data and also to the eccentricity of compliance in a place, in a zone of weak governance, like in my country. It's not sufficient that you are compliant as an individual organization, because you probably find that the biggest challenge you will have is in your interface with the regulator. That is where you will be most challenged on your ethics. So where's the room for collective action as a means to try to bring in incentives? And also the use of data. For example, the Maritime Anti-Corruption Network in Nigeria works with the Nigerian government to identify the standard operating procedures, what is expected of us, and what happens if we are compliant and the government is non-compliant. What can we do in those instances? And that's where data is playing a crucial role to show how many times doing the right thing has been denied. And that is played back to the higher-ups so that they can put pressure on the lower downs to get them to act ethically. So I think that's another area that we may need to look at, because just because it's requested of your home government doesn't mean you can do it in the environment in which you find yourself working if you don't find some other way of building a leverage where you're working. Thank you.
Faisal, you're the next. I have some problems, the controls on my computer don't work very well, but I think Faisal is the next one.
Sure, thank you. That was very, very interesting, Eugene. I was wondering, as you mentioned about culture, there are times where, you know, the compliance program of a company is, you know, the sum is greater than the parts, and so it looks great on paper, or even, you know, it might even work for middle management and other, and you know, employees below that, but there's still you know, the ownership, or there's a cult of personality, you know, at the top that can always circumvent, you know, anything that happens in the organization. And you do you find that, you know, how often do you see that? You know, because we will see it from time to time, and you know, you know, in instances where, you know, it looks like everything is fine, and then when you look deeper into how decision making is made, it's very easy for someone at the top to circumvent the system.
I think it's a great observation. Maybe what I would describe is that every organization, certainly every CEO of every organization, likes to describe this one homogenous culture that distinguishes their organization from others. But I think what we can all appreciate, and I think every CEO also appreciates, is really what a firm is. It's an amalgamation of dozens or hundreds of subcultures. Some of those which are great and well aligned with integrity and ethical culture, and others that are very much, let's say, can be deviating. Sometimes it's because you have a new manager that comes in, which has a different culture from their prior experience. Sometimes it's because the incentives or pressure that some group is facing. And so I think really the organizational challenge is to have that knowledge within the organization of understanding where those gaps are within the multitudes of subcultures. And I think there are some organizations that are proactively trying to identify those and then place additional resources and do those necessary adjustments. Because I think what most of the people, we talk a lot tone from the top, and of course, if the tone from the top is awful, not surprisingly, everything will start to fail or circumvent. But I think for most organizations, the CEO and chief board, they're so distant, they're so far away from the average employee that most people don't really draw any, I will say, lessons. They know that actually even a lot of the emails and marketing they get around conduct are prepared by people that are not those individuals. So what they look to is their immediate manager or maybe their manager's manager to figure out how to behave. And this is why we can see in data, if you actually, literally, if you go across large organizations, if you have a manager that engages in misconduct and is retained at that organization, and there are a lot of reasons why people obviously are retained. Maybe they're given a disciplinary action or some other sanction. The likelihood that you'll see an individual that works for him or her engage in that same conduct, holding all else equal, will grow by approximately 300% in the following 6 months. And it's not surprising if you see your manager engage in X, you probably don't know all the surrounding circumstances or even the sanction, but you see the person is still here, and so that tacitly that behavior becomes slightly more acceptable, and so the propensity that others will engage in that actually goes up. And so I think the challenge we face is not just tone from the top, but also tone throughout the organization, the middle, and then understanding where those gaps emerge, because within every organization they will emerge over time.
Let's collect question from Pana and Lana, and then back to Eugene. Pana, you first.
Thank you for sharing your views, William and Eugene. I just want to share some perspective from Thailand, which, in my personal opinion, we have challenges in terms of having a strong and tough enforcement and regulatory compliance. I say that because some of the cases here drags out more than 10 years before the guilty party is prosecuted. We have anti-bribery laws, which were put in place 7 years ago, and so far nobody has been prosecuted under this law. So in my view, the only thing that's left is not the stick or the enforcement, the government enforcement, but more or less of a market and the carrot. So in our work, the Thai CAC certifies between 30 to 50 companies per quarter. And we found that the best compliance programs come from companies which the CEO and the chairman is truly appreciative of what the anti-corruption compliance does to them. And the two key words for them is risk and sustainability. If you can show that having a good, adequate anti-corruption compliance system mitigates the risk, and you make the price for not having the compliance in place so significant that they see the downside, they will develop a good compliance program. And also in a longer term, if you develop the compliance program towards sustainability of their business, they will see the importance of it. So from the tone from the top, I want to offer the view that the best person to work with is the chairman of the board. If you can persuade and incentivize the chairman of the board, that one person will help the organization develop and implement the right compliance system. I know, Professor Eugene, you mentioned there's quite a distance, but I think if this chairman is wholeheartedly invested in it, he or she will make sure that the implementation within the organization is effective, in my view. The other market driver is also to work with the capital markets. We also try to feature the certification status of our companies alongside the stock exchange profiles of these companies. So we would disclose whether or not these companies have adequate certification program in place or not. So that helps with the investors and the shareholders. Thank you.
Thank you, colleagues. Can you hear me? Great. I just first want to apologize once again for being straightforward. But when you have missile attacks every day on your country, everything becomes very fast, black and white. And I have 15 years of experience of practicing anti-corruption law and compliance, and now my mind, as William said, is occupied with some philosophical questions. So my general opinion is that fight against corruption and promotion of compliance in the world should be like a single ecosystem, so to say. The private behavior cannot be separated from the public behavior. In this regard, tone from the top means not only tone from the top of the company, but from the government and from the international society as well. So when we anticipate from businesses, from international corporations to be compliant, I think we can anticipate it to the full extent in the corrupted world. So that's why it's very important to give response to those challenges which we now observe in terms of political corruption, and not only political corruption, but generally big tides between the corporations and what is going on. And special responsibilities, to my mind, remains with the governments, which used to be, drivers of the international movement of anti-corruption. For me, what I see the dangerous trend is losing of those reputation by several governments, by the international system generally, and a separate trend, which by the way, I observe quite a long time already, the trend towards tolerance of corruption in the international companies. We do a lot of work for major corporations. Most of them are not Ukrainian businesses at all. And what I can see, and maybe it's only my view from my personal practice, maybe it's not a practice or statistics, but I see that more and more companies become tolerant, or at least, it becomes not so much trendy to fight corruption, rather than even if they disclose something, even if they discover something, they are not so much keen to disclose it. and not so much keen to make conclusions to somehow change the practices. So I think there is an interconnection between the trends of the behavior of private sector, of the private companies, and the behavior of the public sector. And I insist on, looking at this more broadly, rather than from the practical viewpoint on private corporations. So sorry again for these philosophical questions, but I think talking about incentives, we cannot omit this, because this is also incentive. In which world, in which environment, as someone from the previous speaker said, the companies are working. Thank you.
Thank you, Lana. Can I ask you for the future? Let's say you're asking many questions, which is fine, but please just ask questions. Don't give so much, let's say, subtitles, because we do understand the issue.
Sorry.
William.
Just a really question to Pana, or just I'm really interested in the change agent model that you alluded to. That's and it's probably a conversation we can take offline. I would love to understand that a little bit more. I also agree with you that the chairman support is often critical, and it's often critical for a risk or a compliance officer, precisely because it gives a different tone and weight when you speak to middle management. Because I also agree with Eugene that middle management or people are role modeled by the immediate reports, not necessarily by the chairman or the CEO, but knowing that you speak with that person's blessing or support does tend to have an influence. The best compliance and the most effective compliance, often in developing world environments, is when you don't try and do compliance. When compliance is an outcome, not a goal. Where ethical leadership and ethical conduct is the goal, properly operationalized in the business, that then produces compliance outcomes. It sounds idealistic, but you often do it, to Isidora's point, because it facilitates better decision making in highly complex environments, and it actually facilitates better business. Not in all cases, but I've seen the commercial competitive advantages of that approach coming through. So it's an interesting one that sometimes the best compliance is achieved when you don't necessarily try to do compliance. You try to do responsible business, which produces compliant outcomes.
Okay, well, let's see, Claudia, would you like to ask a question or answer one? Because we are running very...
I will be very, very brief, just to add to what William just said. I think we saw it a little bit within the Corona crisis as well. So the companies and the organizations that already had very robust models in place, that had an idea about their internal culture, that really knew about how to respond to certain issues, for them it was easier until a certain case to maintain a specific level of integrity and a specific level of responsiveness as well. They were faster because they did not have to look so much inwards and find new processes, etc. So it was quite interesting to see that in the situations of crisis, we often get back to the bone and the core of what the companies and also the organizations are about, and it becomes like more visible where the actual challenges lie.
Thank you. Eduardo.
Thank you. If I may, I would like to address one of the questions in the box. One of the participants is asking for examples of KPIs when it comes to looking at and managing anti-corruption. We use plenty. So we look at the number of discover cases of bribery and corruption. We look at cases of mis-selling. We've looked at cases of complaints. We also look at fines received by regulators and prosecutors. We also look at whistleblower cases. And extremely important, we look at the near miss cases of all the previous ones. Sometimes organizations may say we only had one case of bribery and corruption, but there were 15 near miss. And that's extremely important when you look at holistically at the organization and evaluating whether we have a strong compliance program or a weak awareness across the organization. I'm always happy to follow up offline. Thank you.
Thank you. So let us continue to the second part for which we only have 32 minutes. I have to say, we responded to many of the challenges and issues which were planned for the second part already this one, but still, let's go and try to see how much we can do. So now I will not give you an limitation in minutes, but as short as possible. And here we're discussing what are the governance approaches for assessing corporate compliance. And there are governments which are interested in that a lot, and there are governments we do not care so much yet. So let's hope this will change. So Isadora, in addition to DPAs, the CEPEN law requires large French companies to implement compliance programs that meet minimum standards set by the French law. So to what extent AFA can really assess the company's effectiveness compliance efforts? And how do you do it in practice? And what are the challenges there?
Thank you, Drago. I'll try to be quicker than I planned, so we can have more interventions. So we assess the effectiveness of compliance programs through our audits, which are not investigations, and this distinction is key. The goal of an audit is to check the existence of the compliance program, its relevance in light of the company's risk environment, and its effectiveness in practice. And how do we assess this? We test the program by analyzing samples and case studies. As Nicola mentioned, our idea is not to see the goal of the program, to see how it reacts in the case of an incident or misconduct, but to focus on the process, on how the procedures work on a daily basis. So for instance, we can ask a company to show us how anti-corruption due diligence procedures worked during the latest mergers and acquisitions, or to show us how a specific whistleblowing report was addressed. And the objective here is to verify if everything that needed to be done was actually and correctly done. So this is how we do it. And to perform these audits, the FA has broad powers. We can assess any business information or document and question any person whose assistance is considered necessary to understand the compliance program. And so this includes the analysis of documents, contracts, interviews, surveys, and testing, both in the company's headquarters and its subsidiaries, if it's a French group. And then we draft audit reports. That's a very classic method. Maybe I'm not going to go into much detail. Those reports are thorough and they examine the gaps between the existing measures and the best standards that are promoted by the FA. And based on these gaps, we try to help the company to close them. So to adopt an action plan that is approved by the agency. And in case of non-compliance, we can impose administrative sanctions. So those compliance obligations are really mandatory and they can be enforced through administrative means. And what distinguishes us as a government agency is that we have a unique perspective into the French business fabric. We can audit any company within the threshold defined by the law, and we can target any compliance measure. And so because the scope of our audits is broad, is extensive, so is our experience. And I think that's how we can really assess compliance accurately. It's because we have in-house expertise. It's because we have a multidisciplinary team with experience of anti-corruption issues, both in the public and the private sector. So the people here are key in order to conduct those assessments in an effective way. And well, in all this wealth of expertise that come from law enforcement agencies, the Court of Auditors, but also from the private sector, we have agencies that worked in banks, consulting firms, multinationals, etc. All this wealth of expertise is put at the service of the public interest. This is also a characteristic of a government agency assessing compliance. And on the challenges, very quickly, as you can imagine, it is difficult to reach all the companies within our scope with our limited resources. I think all government agencies are confronted with this issue. And it's also challenging to ensure that compliance programs remain effective in the long term. This is a question that also Nicola raised. It can an incident can happen afterwards. So it's the question how to ensure an ever improving program after the audit, after the FA has left. And for this, we consider that it's key to maintain an open and constructive dialogue with the private sector and with compliance officers. I think I touch upon different issues, and I can end here so other speakers can address their questions. Thanks.
Thank you. So what we'll do next, we have to give our panelists a chance to tell us what they have prepared for us. So we'll move immediately to Saba. So Saba, how do you assess the effectiveness of compliance mechanisms in the companies you're dealing with in the enforcement procedure?
Thanks, Drago. Well, it comes back really to an awful lot of what's been said before. Eugenie, you mentioned the DOJ questions that they have to interrogate compliance programs, and I suspect that what we do is actually very, very similar. We work very closely with DOJ, and we have a lot of experience in our senior management, both at our current director and one of our heads of division have a lot of experience from previous compliance roles. So they've really brought that to the organisation. And we've done a lot of work increasingly on compliance over the last few years. So a few years ago, we published guidance, obviously, on how we evaluate a compliance programme. And the intention behind that was to make sure that we try and take a consistent approach across a wide variety of corporates that come through our doors and into our investigations, and also to provide guidance on what effective compliance really looks like more broadly. So that guidance adopts the UK Ministry of Justice's 6 principles, which aren't prescriptive, but they are a sort of guiding points for an analysis of a compliance programme. I'll just run through them very, very briefly because I'm aware of time, obviously, but they are proportionate procedures, top level commitment, which obviously comes back to Wilhelm's your point about good governance and commitment to resourcing appropriately a compliance department as well. And that's definitely something that we look at. We look at how well resourced a compliance department is and how experienced those people are and what the training is within that unit. In relation to board level commitments to preventing bribery is something that's very, very important to us. And I echo what's been said previously about chair commitment and having a chair on board. I also accept what Eugene says about it's not always enough. And companies have pockets of culture within any business that isn't perhaps in line with that top level commitment. And we'd scrutinise that as well. That's something that goes throughout any business. And obviously, if we're looking at a particular business area where we suspect bribery, then we would scrutinise that area as well and look at the relationship between that area of business and any compliance department and what interventions and scrutiny that they've had. In essence, what we're looking for, though, is that the board of any company are fostering a culture where bribery is simply unacceptable and doesn't happen. And I think that comes back to that kind of good governance, ethical business practices throughout, right from top to bottom of any particular company. The third of the 6 is risk assessment. We'd obviously expect a thorough risk assessment process in considering all internal and external factors that's constantly evolving throughout the life cycle of any deal or any transaction or any business relationship. Fourth is due diligence. We expect that procedures are applied. The procedures that are applied take a proportionate and risk-based approach to any person performing services on behalf of a company, whether that's intermediaries, vendors, employees. And then the fifth is communication. And again, I guess this is how the top level board agenda trickles down throughout any organization. So we'd expect that bribery and corruption policies are properly embedded throughout the organization, that training is there for everybody, and also that the company take responsibility for ensuring that that training is understood and is implemented on a sort of day-to-day basis. And then the sixth, final one is monitoring and review. So how does the organization monitor and review its procedures? How does it make improvements? How does it spot problems and deal with those? And what mechanisms do they have in place to make sure that the anti-bribery and corruption policies aren't just in two legal arch files on a shelf? So that's high level, very quick. What we look at, the areas that we look at, the areas that we question on. In terms of what we do in practice, obviously in our investigations, we would interview all relevant people in an organisation or in a particular compliance department. We have the power to be able to compel people to answer questions. We also have the power to be able to compel document productions, and we scrutinise those very, very heavily, alongside a range of other mechanisms and efforts that we make. Drago, I think you wanted to talk to me a little bit about the challenges that we face in looking at compliance programs.
Yes, please.
So I'd say that those are probably ensuring that we develop a full understanding of the relevant business area. Obviously, we're investigators and prosecutors. A lot of us are lawyers. A lot of us are ex-law enforcement. And the SFO investigations cover a very broad range of different business areas. And so we often turn to that business and expect them to explain its own compliance processes to us. We expect thorough engagement throughout. We'd expect that different industries across different geographical regions and have different requirements, but we really are expecting thorough engagement, thorough commitment, and thorough explanation. And we will scrutinise that very carefully. Another challenge, I'd say, is ensuring that value judgments about a compliance programme, if programme's effectiveness, are really underpinned by sound legal reasoning. The difficulty that we have in having a lot of different business areas and a lot of geographical areas as well is that policies and procedures, I think we've heard today, there's lots of good examples of different practice from around the world, but they do vary across firms and sectors. And so we try and ensure through our guidance that we are evaluating the effectiveness of those compliance programs in a sort of a sound, rational way. And then finally, last challenge that I've sort of flagged is where in the context of a DPA, where the terms of that DPA require compliance programs to be strengthened, the SFO have to go to significant lengths to be able to audit that development and those improvements. And as I mentioned previously, that often involves a third-party monitor or reviewer to ensure that that commitment is there and continues to be there on an ongoing basis. And of course, we have the stick or carrot, whichever way you like to look at it, that if a DPA isn't complied with and the improvements that we've required aren't in place, or there's a deterioration of a previously good compliance programme, then the prosecution can ensue DPA as well.
Thank you. That was really exhaustive, comprehensive, and useful. So Faisal, let's move to you immediately. How does the IPIs assess the level of corporate compliance, both when deciding which company to support and when you're sanctioning them? And what challenges do you meet when you do that?
Thank you, Drago. I'll mention one thing briefly on each. So in terms of assessment, it's very context dependent. And the context is looking at the risk from a bunch of different angles. So there is the counterparty risk, where we assess clients or companies on a number of different integrity risk flags that we look for, including corruption risk and allegations of corrupt practices. We also look at the sector risk, so this particular sector that we're operating in. For example, if we're doing a deal in the port sector, we will look at the specific risks that we've had experienced in that sector. We look at the jurisdictional risk. So if we are operating in a country that has a perception of widespread corruption, that the jurisdiction in which we are operating it is something that we take into account as well. And then there's also the product risk. So the specific product that we're offering, where are the vulnerabilities, where are the potential risks, avenues related to that specific product. So we look at all of that when we're assessing companies, the risks that they present and the compliance programs that they need to have. In terms of the challenges, sometimes we work in emerging markets. We work in some of the riskiest markets. In fact, our corporate strategy is to, by 2030, have 40% of our book of business in what we call fragile and conflict states. So when you're working with a lot of these companies, they're not going to have best-in-class compliance programs, right? I mean, that's why they're coming to us for development finance, because they're looking to grow and improve as companies. So sometimes when you're working on them with compliance issues, it's a little bit of building the airplane while you're flying. So you're working with the company, you're trying to finance them, you're trying to help them from a development perspective, while at the same time, improving them from a compliance perspective, which they're not necessarily going to be at day one when you begin engaging with them. Thank you. I think you're
muted.
Yeah, thank you. Claudia, can certification mechanisms play a role in helping governments assessing the compliance? There are many, let's say, certifications mechanisms around. What do you see as advantages or drawbacks of that approach?
Yeah, it's a complicated, or not complicated, but rather complex question, actually. So the answer is yes and no, depending on how you look at the certifications, if you can really, or if they can really be useful for the governments. It depends on many factors. If you look at them, first of all, is it a seal or is it a certification? So is a big process behind it, or is it something that maybe is more designed for reputational reasons? Is it a requirement to gain access to specific benefits, or is it something that companies need to have to gain access to or be able to work in specific sectors or specific procurement processes? So what is at stake if these certifications are achieved? Then also, what is the extent of the evaluation of the process itself? So is it a self-declaration, or are there a lot of supporting documents necessary to be able to achieve these kind of certifications? Are there maybe external auditors involved? Then you also need to look, of course, at the fact on how often these processes are reviewed. So results, of course, show mostly one moment in time. Things can change. We have heard it today again. So it's important for governments, if they want to use this as an indicator, to also take into consideration how long ago was this assessment. Then also, what kind of entities is it aimed at? So does it only speak to multinational companies? Does it speak to big companies? Is it something that is relevant for investors, or is it also something that is made for small and medium-sized companies or enterprises? You need to take into consideration that there are, of course, different needs, different capabilities of handing in or even having specific mechanisms in place. I think Faisal just said it right now. Some companies are building the plane flying. Then also, who was consulted in the development process? We often see that in some cases only companies themselves develop a seal, or on the other side, only the public sector comes up with a certification process, and ideally we would see a joint approach. I think Isadora spoke about it a little bit as well. And also, who does the assessment later on? Are the people doing the assessment actually qualified to do so? Are there auditors? And last but not least, yeah, how transparent is the process at the end of the day? Is there a possibility for public scrutiny? Who overviews it? Who is responsible for all of that? That all said, there might be many other criteria as well that you should consider it to answer this question. But in principle, I would say that certification, of course, can be an interesting indication, at least for the government. It can give them a criteria on how to evaluate. It can give them a first impression. Often big companies and the certification processes are a bit further than what like especially municipal governments can like assess or can see, and it's a possibility to learn here. Also, companies that went through certification processes, they often already understand what is required of them, what is the process, what kind of processes do they need to have in place, what documents do they have to provide. So there is a certain knowledge about that, but yeah, as we have many times said today as well already, it's not only about processes and check the box documents, but yeah, the quality and effectiveness of those programs, they play a big role. And yeah, we know even between us here, we talked a little bit about it, and evaluating the effectiveness of a compliance program. It's something that even experts struggle with. So it's quite interesting perspective. And something that is really important to consider is that certification can even be counterproductive. So if the agents that are responsible for the certification are not at some time overseen or do not have an overview, they are not held responsible, or they do not have the capabilities to actually evaluate, they can become themselves a risk factor for corruption as well. This is something that also already has happened in many cases. So the process, if you want to use it, if you want to use certification, but if you also want as a government to look into that, you should accompany this by capacity building and include, of course, also mechanisms of accountability. So yeah, I would pause here. I have a bit more, but I think we are short on time, and I think it would be interesting to have a discussion on that and the other topics later on as well.
Thank you, William. What lessons can government learn from the private sector? What would you say?
Yeah, it's, I'm not. I think what lessons can the private sector and the public sector learn from better players. I'm not always certain that the private sector necessarily has better answers around some of these things, but from an assessment or a due diligence perspective, your assessment should look like a funnel. You should have basic assessment. Almost all entities should be subject to base assessment. And then you should have defensible risk-based reasons why you effectively don't do certain types of assessment. And as you go into those fragile states that Faisal mentioned, you place less and less reliance on the structured or unstructured data sources that you can extract through platforms, and you start placing more and more reliance on human intelligence and just a little bit of gray hair in a particular area of the world that just understands the environment a little bit better. It's not always it's not always that more complex than that. Your challenge is you have to do it at scale. So you have to produce a large volume of assessments, and you need to understand when do you deep dive and when don't you. So the companies that do that well have a due diligence and assessment approach for third parties that truly look like a funnel and has a very integrative perspective. It takes bribery and corruption and human rights and other factors and it puts it together. The other I think important thing that often the non-OECD countries can teach OECD countries, is that those entities, non-OECD entities that are very well governed, have a very strategic approach to human resource management. Culture is primarily who you hire, who you fire, and who you promote. And if you take a strategic risk management approach to how you approach human resources, your ability to manage payback risk significantly increases, because at some stage you cannot regulate for integrity and you rely on the character of the leadership in particular areas of your business, often in the areas that is very far removed from head office and its systems and procedures and so forth. It's not an either or, it's an and, so you need both. You absolutely need both. You're not just relying on character and culture. And you also can't just rely on control. It is culture and control, both of those components together. And that means that you sometimes have to elevate human resource practices or moderate it, that it actually becomes quite an essential tool of your risk management practice, especially in areas where the quality or the standard of your governance in your organization exceeds the standard of governance in the country in which you operate. So that becomes an important factor to consider.
Thank you, Willem. And the last one for today is a plan from the panelists. Eugene, what information you think should government require companies to provide or publish that in order to understand corporate compliance from the outside, which sometimes might be quite a complicated issue?
So I'll make maybe one observation on this area, and that I think right now most regulatory compliance evaluations, so done by regulators or enforcement agencies, are what I would describe as example focused rather than aggregate practice focused. And so what does that mean? Well, I'll give an example, and this is, again, going to the, the DOJ compliance evaluation, since that's where I have the most visibility from how firms respond. One of the questions that's asked on the DOJ compliance evaluation is, has the company ever terminated or otherwise disciplined anyone for the type of misconduct at issue? I'll say very reasonably straightforward question, which is quite obvious is what you want to know if you're investigating someone for, an FCPA corruption violation. Have they ever encountered people paying bribes before? And if so, it may be much lower magnitudes. What have they done with those individuals? And invariably, every company, when they're under an evaluation, provides examples. Here are 10 employees who we've seen with related conduct in the past, and here's how we dealt with them. And they provide nice documents showing how they've disciplined each of those. What the question is not asking, and what companies don't provide, and actually requires the regulator or the enforcement agent to ask, is have you ever observed this kind of conduct before and not disciplined someone in that way? I mean, it sounds very obvious, but what you see is firms answering the question that they're literally being asked, which is, here's what we've done with people who dealt with those issues. And as we know, there might be senior people, there might be successful salespeople who've actually, they've let, quote, off the hook. And since no one's asking them a question, they don't provide that. And that's actually the substance of the compliance evaluation. And as I go through many regulatory and compliance evaluations, under different civil and criminal agencies, around the world, what I see firms doing is they are not responding at what I call a scientist seeking the truth. They're responding like a lawyer under litigation. And so they're answering the most narrow possible way to try to succeed. And so I think this does require a degree of, cleverness, detective work, and I think trying to think one step ahead for the regulatory enforcement agencies to be pushing firms to be asking what they might be leaving out. And that's not because they're, ill-intentioned, but since these are high stakes situations, they were responding as if they're a lawyer under litigation, not as someone trying to actually solve these problems. And so I think that's the equilibrium that we're still off on, but I am optimistic that it's going in the right direction.
Thank you, Eugene. So you see, this happens when you have such a qualified panel of experts discussing the issue, which is really, really broad. So we will stop here because whatever we do, we will go well beyond time which has been decided for us. So let me thank you both, the panelists, the discutants. I thought before this roundtable that I know a lot, but I realized that basically I'm still learning. And hopefully this is the feeling which also all our participants have. And if nothing else, we proved today that the series of events which started last year, it is useful. It is, let's say, it's simply needed. And let us hope that the OECD will continue next year. Thank you all, everybody for the active role, everybody for listening. And the last word goes to Olga.
Thank you very much on behalf of the OECD for your generous sharing of knowledge and advice. Very practical things. We will the recording of this meeting will be placed on our website, and we will send you links. You're welcome to share it further. And we will, of course, inform you as soon as possible about the next event, which will be on the small and medium-sized enterprises and integrity for those, and later on also regional events. Thank you very much and have a very good weekend.
Thank you, Olga.
Thank you.
Thank you very much. Have a
Thank
nice
you.
day.
Thank you, everyone.
Have an excellent weekend.
Thank you.
Excellent
Bye.
weekend
Have a
to all
good
of you.
weekend. Bye.
Thank you.
Bye.
Now I'm going to
Bye-bye.
have that glass of wine.